Hello and welcome to the Friday Wrap Up brought to you by David Gockstein. I'm your host, Landy, and today is May 8th, 2026. I actually had to look over because I forgot what day it was real quick there. We're going to look at Bitcoin today. We're going to talk a little bit about, target was hit overhead above the 80,500 to 700 area where we were looking right around the $82.5 to $83,000. But we're going to take a look at the weekly. We'll take a look at, of course, oil and traditional markets. But let's start with the daily here on Bitcoin. We got a beautiful swing above the monthly area at 82.5 to 83K. I don't recall exactly what the swing actual high came in at. Swing high came in at 82,814. So basically splitting the difference between what we were talking about and something that we were looking for, on any closes above 80,000, 500 to 700, that is the place to look. And I would argue, as long as we have uptrending structure on the daily here, that, Bitcoin, does favor a move to maybe even retest as long as we continue with uptrending structure, right? So what you don't want to see if you are a bull is for a higher low to form very close to the lower high, come up and run it, and then take out the higher low. As it stands right now, the last higher low on the daily is here at $75,000 or 74,914 in this case for spot price, with the close open coming in at 75,750 or so. So realistically, the easiest way to look for this is watch structure up here on a close, right? So we did have the sell-off after running the monthly close open there at that 82.5. We had a 79,450 or so low on that Thursday candle. Friday kind of going sideways. If we see a higher low set up here, it doesn't mean that it's immediately over. But what I would be aware of is that this is now going to be the criteria. And how would we know that a higher low is set up here on any close above around 80,500 or back above this weekly here at the 80,700 area? I would be looking at this as a higher low, and that would be the area to watch instead of just $75,000. I'd be keeping a close eye on that and any kind of closes under that if we did see this set as a low on a closing basis. But right now, it's not set as a low. We would need to see closes above around that 80,500 to 700 area in order to see that daily low set here. But again, I mentioned that just like back here, there would still be opportunity for the bulls, right? So off the lows at $65,000, the first high from 2021, we saw the nice uptrending structure. We got a higher low on a Saturday to Sunday set right up against the $78,000 to $80,000 overhead resistance here, and we did get a trend break. But I had mentioned even at the time, as long as we were closing above, $74,000, all good to go back and test, the overhead weekly at 78 to 80 essentially, or 78, 4 to 80,500 to 700. And that would be the same kind of criteria. Even if we did see some sort of a lower low structure, like let's say over the weekend, this sets another higher low and a close. As long as it's closing in and around, the 78, 78.4 region, no biggie. If it's staying in this region. And honestly, even if it came down to the 74 to 76, what that would start to do is look like it would want to go from this expansive posture up back into a consolidation or compression, which would still offer up opportunity for further upside for the bulls. Where things would get dicey is closes below the $74,000 region, specifically in the upper 73s. If it started to lose this area on a close, which the warning would be, lower term time frame closes below 74, I really would be looking right back to the 70 to 72 region. Now, if Bitcoin does push above, the $82.5 to $83,000 monthly area, the weekly overhead is fair game. Now, front runs there probably around $85,000, but the weekly specifically is at 86 to 89. And you can kind of call that, 86 to 90, because that is kind of the area of interest. And I wanted to point out, because it has been a while since we've talked about this, and I know that I've mentioned it a few times here, but all you have to do is take this and pull it back to this high here. And we can even just call it 89, right? We can, because this higher low here and this lower high are essentially the inflection point up here. And it was even acting as a lower term time frame inflection point when Bitcoin was consolidating over here, right? But we had a higher low swing, right? And this is where we had a confirmed low set to a higher high, lower high. This was that bull bait. Then we came back down to, of course, in this case, the 93.5 to kind of 95, 96 level. There was a point of control in there and everything. Once it really started to drop, it nuked all the way through, of course, right down to where we eventually set this low at 78.4 or so. And this is going to be a big inflection point if Bitcoin is going to move on past the, without a correction or a consolidation. If it's going to continue up, I would just very closely watch the $85,000 to $86,000, which is the lower high close here, to that 89 to 90 essentially, where we saw the higher low and lower high swing come into play. And this is a big area. This is still bearish retest. This is still a big bearish retest area on the weekly, right? We've seen a nice run of the swing low here. But the real weekly retest would be into that 86 to 89. So still a bearish retest. The only way that this wouldn't be a bearish retest is closing back above right around that $89,000 and starting to run back towards that, this high side structure, 93.5 to I would say just $98,000, which is this higher low and lower high inflection point. And this was really the big lower high that kicked off the bear trend and the bear market. Now, if we were to see closes above $98,000 on a week over week basis, I would say that was bear market over, right? I've mentioned this a few times already. That's where the deviation of wider trend on the monthly would be in play that I talked about when we were correcting off of the all-time high at 123 to 125. I'd mentioned well before we broke below 74.4 and that 82.5 close is like, hey, beware of, one scenario that could play out if you are ultra bearish, and that is that a deviation of trend on a wider time frame is possible because of the volatility look on the monthly and quarterly. So that's something that I've maintained. It's still an open, kind of an open issue right now. But there's not enough information to call the $60,000 low the macro low on higher term timeframes. It is a major low, and it is a lower low that is confirmed on the monthly time frame. Now we await, any kind of reclaims on the weeklies and see how things go when it does correct, because Bitcoin will correct. Just a matter of from where and to where. And in this case, for the weekly here, could we see an extension up to 85 to 86? You can see the upper first standard deviation of the Bollinger Band set is there. And, if it did start to get above that area, you can see that the upper second is in that $93.5 to $96,000 closing area. And then just above it, in the zone between the upper second and upper third here, we have that $98,000. Some people have $100,000 just because they want to see some bullishness over the top of that area, reclaim of the low and the lower high. And in this case, we could see extensions all the way up into, the $93.5 to $96,000. Doesn't do a whole lot in terms of the wider structural downtrend for Bitcoin. Yes, we have a shorter term time frame uptrend. It's really about now. That doesn't mean that it has to go and break that, and that's the only condition in which this could be set as a macro low. But the further that Bitcoin gets away from $65,000, the more room it gives itself for a healthy correction, right? And that's what you would want to see. Like even from here, you could get a healthy correction all the way back down to the lows Preferably, if you're bullish, you'd rather see it sitting above this range here, around the $70,000 to $72,000 area or thereabouts. Yeah, it could dip a swing candle into 68, 69. But realistically, if that resulted in further higher lows, then you can probably surmise that passing wherever this high comes in, that we could very realistically start to get a compression on the weekly, and then we can start to look at how trend would either chop around or change, and what the conditions would be to meet closes above $98,000. So realistically, this move isn't necessarily the move that needs to get to $98,000, but as it stands right now, the last higher low in the weekly is 65. So at minimum, that needs to be held up on any kind of a correction for Bitcoin. And it's still got some juice to it right now. I wanted to look at the Bollinger Band set. We had slight compression after an expansive move up, and kind of realistically a grind up for Bitcoin on the daily out of that, off of the lows at 65 to the major bearish retest regions. Nice reclaim. I would say you want to see bulls closing above the 78 to 80,000, 500 to 700 area. I mean, I would argue you'd probably want to see a close above 80,700, right? Because that would be a weekly reclaim of the low over here, which is right around 80,500 to 700. And in this case, seeing a weekly close above there would, not just show that the bulls can break back into this area in the auction on the daily, but also the weekly. That would be a good sign. Again, that's a monthly close open right there at 80,500. So we would need to see that closed above and subsequent closures. Corrections, you can see the basis band on the daily here, right at that 78.4 level. So 78 to 78.4, as long as Bitcoin's staying in this area on the daily. Yes, it can swing outside of it, but as long as it's staying in here on closes or very close to it, I'd be looking for more opportunity to run this local high side structure. But if it does start to correct from there, then I'd be looking down to essentially, 74 to 76 is the next big area. And you can see how the bands are kind of lining up there. Basis band here. If over the weekend we continue to see price hanging above the basis band here, we're likely going to get that lower second standard deviation right off 76K on a close over close basis through the weekend. And and I don't hate this look at all. I will say that avoided the bearish divergence here. Longer term bearish divergence not looking great. Weekly, nice little head and shoulders, inverted head and shoulders on RSI here, running towards the midline. We're looking at 81. All right, and where is the bullish control zone? So this is where, after exiting the bearish control zone, it does pay to take a look at the change, because today is a Friday. So we have this current weekly data for where the edge of the bullish control zone is. At this particular moment, it is at 95,820 for the edge of the bullish control zone. So that is pretty important. Why? Well, I'd like to see the change from this week's close to next week's open, and where that RSI bullish control zone estimate updates to. But again, where is that? That's this zone by the upper second standard deviation on the weekly. So look, I would not be in the camp of touting that the macro low is in. I also wouldn't be in the camp of right now being an ultra bear, right? This is where you just kind of await confirmation of your thesis one way or the other. And I'm still in the camp of this is going to take some time to play out. So I am of the opinion that we are still on track for potentially confirming when the macro low would be in. Like, hey, looking at the structure and going, that's a macro low, somewhere around end of Q3 to early Q4. And if it is going to push on longer and grind and go into a consolidation, then we'll have to update that probably Q4 to Q1 of next year. but I'm not looking at this as a race back to the all-time highs. And I think that that wouldn't be healthy price action if we saw it right from here, right now, before then. Doesn't mean that it can't get back into those upper areas, like reclaiming some of the 90s and maybe even heading up towards those areas. But, there's some people that think that we are like imminently going to go and make a new all-time high right from here, right now. I'd argue that be patient and watch structure. This, as it stands now, is a bearish retest. And until we are out of the bearish retest area for price action, then we can start evaluating, when all-time high, when moon, right? Let's go ahead and take a look at oil real quick. And traditional markets, we hit a bunch of targets. I know that I didn't get one of the videos out this week, and I do apologize. That should change for next week. Apparently this chart's not going to load. So one of the problems that I'm having is because where I'm at, I couldn't get a good connection, so I am tethered to a cell phone operator that is not a normal operator. And it's looking as though I might have lost my connection to the TradingView servers here. So what I will say is, we, as far as I remember, I'm just going to have to go through because this isn't loading right now. All right, so we hit targets. I said right around 730 to 735. There's WTI crude. Thank you. All right. So I had mentioned, where you really need to pay attention is the 90 to 95 level for WTI. And we're set up in a range now. This is actually really clear. If we start to break below the lower first and the low here, and more specifically lose the $90 region on WTI crude, I'd be looking for this to head right back down to, 84 to 86, right there by the lower second standard deviation. Anywhere below there, we're running this low, which is now, fairly close to some areas of interest, 76 to 78. But if we start to close below that lower second, risk on, baby. Risk on, march on, right, for traditional markets. And likely that would be an expansive move back to the low. We lose that low. It's really all about 74 to 76, and then it's all the way down to, the main side supports there. I know some people would be looking 68 to 72. Sure, maybe on a swing, but we'd likely trend right back down into the macro support area of interest. And for those that may remember, on the monthly, one of the reasons why we were looking at oil is when we had this close, we had the swing of the low, the sweep, and we had the close back above on the monthly, this 57 area, which is this swing, the low side swing of this order block candle or whatever, fancy shit you want to call it. But it's the first real bearish candle after the rally up, higher lows off the lows, right? Like we had the real big move down, obviously, in oil, and this was back in 2020. We had the big move up, set the low, lower high, higher low, and then, we shifted structure. This was the first bearish candle on the monthly post-structure shift, right? And that has defined the low, back in 23 into 24, the low side structure before coming down and just really filling out the bottom side of that and swinging below it. That was telling us we were going to get a move no matter what the narrative was going to be. Obviously, we know what that narrative is now. But realistically, that's where I'd be looking. Same back to the upside. Watch 98 to 102, 50 by the upper first. If we were to see, this didn't actually set a low here. So this is higher high. And if it decides to set a low here, we'd see closes above, back above 98 essentially. And then I'd be looking for 102.5, 98 to 102.5 as the bigger area of interest on the daily. Then it's all about getting to 105 to 107 breaks above. Looking 110 to 112 up here. Anywhere above there, this is going to slingshot right to that upper third, 115 to the highs at 120, and potentially rope in 115 to 130 as a wider area of interest on the macro time frame for overhead resistance. So, that would be risk off if it does head up there. It's just a matter of, is it fundamental? Like, is there, supply? Is there a supply side issue? Because right now, traffic patterns are pretty normalized on the global shipping scale, and in avoidance of the Strait of Hormuz, right? So it kind of doesn't factor if there's conflict. The biggest factor would be is if there's successful Iranian strikes on UAE or Saudi infrastructure, that is pumping out either side, essentially one side to the Red Sea, other side, out past the blockade and past the strait for UAE, and that's going to be something to monitor. And I think that even if there was some kinetic action taken by the United States officially, like, yes, there was some kinetic action, as the United States did fire back and hit targets after they were under threat for those three destroyers. They then fired back throughout the evening at various sites that had initiated the kinetic action. So they did retaliate, but that, didn't do much, right? We had a little bit of a jump in oil off the low side structure. It's more about, like, even if we saw some kinetic kickoff, like in earnest, like United States, like, now we're going to, resume bombing them and resume kinetic action officially and not just retaliate, then I think that you would see prices for oil rise. But if there is no infrastructure supply side getting hit, they might go full death blossom and try to, hit their Gulf neighbors again. But if no infrastructure is damaged, then it'd be a shorter term move, not a fundamental issue, as we are seeing normalized patterns. So keep an eye on that. And if you're looking to gauge risk, understand that the risk right now is risk on with oil headed down. Now, we've also had in the United States good job numbers and stuff come out. So, there is reasons that this has been goosed. All right. So, I'm still kind of having some issues here. So I would have, if I had, we had already kind of hit our 735 on Thursday. My video from Tuesday, obviously I was talking about, 730 to 735. We were kind of already there, looking to 740. Can this continue to grind up? Yes, I would take it 5 points at a time, just like I've been saying. So above, 735, looking 740, 745, and potentially even up to 750 up here. And right now it's all about watching for gap fills at higher lows and the 725 to 730 area. So what are we at? 725.04 to 730. And, where does structure change on the daily? That'd be below 715. So, pretty straightforward stuff. NASDAQ, we hit our 29K low $29,000 areas here as this is spinning. Yeah. Anyway, I'd mentioned 29 and a half and potentially even up to 30K. Absolutely on the board. And realistically, when looking at structure, you can see that, there's the band up there, upper third, up there by basically 30K. This will open at 30K on Monday. But yeah, we were looking 29 to 20, over 29. I think I even said 29 too. Obviously, we got a beat on that at 29 to 35 or so. And, just be aware of gap fills of the, structurally, this is fine. Structure wise, above 26, 9 to 27K. Beware of any kind of moves back down. Just watch it closely around 28K for a gap fill. I think that there's many that would be taking opportunity there, but just watch it closely. But it can continue to march on if the risk environment is correct or right for the trade, right? And we are seeing, capital fleeing, demand destruction in Europe and Asia. So this is it's nice. It's going into markets, right? Got to make money somewhere. All right. Yeah, and this is where we did get, a move up, and we didn't get resolution of that move for the Bollinger Band set. Seeing this nice squeeze on Dow, and we need to see closes above, and we didn't get closes above. We got a close open right on the 50K region, and a nice swing into. Oh, now this is not. We basically swing into 50. I'd be looking, around 50,500 on the highs, and then potentially to 51K. So, yeah, that's pretty much it for today. I will be back here on Monday with a much better connection, as I should be back home on a normal connection. So, hopefully I'll be able to share some charts with David next week as well on his show on the breakdown at 12 p.m. Eastern. And then I'll be back here at 6 p.m. Pacific Standard Time, 9 p.m. Eastern, and with the Macro Monday video for you. So I hope you like and share this out there if you did find this information helpful. It does really help out, and I really do appreciate you all. Been having a lot of great conversations with many of you in the various chats, and even some of you now coming to spaces. That's awesome. It's great to see. If you ever want to come up on stage, you can always request in the back channels. If I'm on stage, I can always message somebody like, hey, this person's trying to get on stage. They want to add something. But yeah, I hope you have a wonderful weekend, a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care.